So now, Michael, come on back up. And we have a great panel here that's going to talk about shrinking the catastrophic risk of wildfires. So focus on insurance, industry and regulations and challenges there. So Michael, take it away.
Thank you, Steve. Work on getting my colleagues up here. I see Kenton in the back. TK, very good. Come on up. Just to echo what Steve's comments with respect to the tag team of Aaron and patients, I had the privilege of spending about an hour with them recently. And as someone who was really thrown into recovery work with no training a few years back, I saw a lot of chaos around me. And what I will tell you today is I'm very confident in the leadership that Aaron and patients bring to the table. And I think the connectivity to local government and our local communities will be significant. So thank you again for your commitment to be here. Appreciate it. Gentlemen, come on up. So in convening this panel in a former life, which seems like a long time ago, I was an insurance regulator, and it's what every young child wants to grow up to be, or maybe, yes, a fire engineer, whatever the case may be. At any rate, as you all know, insurance is an incredibly critical part of the recovery effort. And we put together this panel to provide an array of an industry perspective on where are we today, especially the fact that we live in a Western state and we're in the high risk category. Wanted to talk about the regulatory perspective, and there's a lot of moving parts to that. So in terms of the legislative side, and TK will queue up on that. And then the final piece will be from the Institute of Building and Home Safety, and Evan is here to talk about really, really solid research that his organization has done to reduce fire risk at an individual homeowner level. So to start, we'll queue up with Kenton from the Northwest Insurance Council. Thanks for being here, Kenton.
Thank you. A pleasure. Good to be with you, Michael, and good to be with all of you this morning. Do I need a clicker, or is someone else going to advance?
Yeah. Slides. I'm looking for help. Do we have? It might be up here.
You take the microphone.
Great. Thank you so much. Okay. Good morning. My name is Kenton Brine, and I serve as president of the Northwest Insurance Council. Turn it on first.
Point it over in this direction.
Oh. Over here? Okay.
There we go.
Cool. So the Northwest Insurance Council exists, has been around since the early 1960s in various forms. And our primary mission is to provide information about home, auto, and business insurance to consumers, news media, and public policymakers in Washington, Oregon, and Idaho. We're based in Seattle. I have an office in Olympia, and we have counsel here in the state of Oregon. And then I go to Boise as needed. I want to talk first a little bit to give just a little bit of a primer. Make sure that worked. Oh, yeah. Okay, good. About homeowners insurance generally. So property and casualty insurance refers to like insurance that's for your home or your business or your car. It's liability insurance, it's umbrella policies, it's not health insurance, and it's not life insurance. A quick primer on homeowners, mobile home, and renters policies. A homeowners and mobile home insurance policy covers damage or loss to your home or its contents from theft or fire or wind or other storm damage or other covered peril. And this is an important term, this insurance term, covered peril, because there are some things that homeowners insurance policies do not cover. And I'll speak to that in just a moment. So a key difference between homeowners, mobile home coverage, and renters coverage, when you have home insurance or mobile home insurance, the policy is intended to cover the structure and its contents. Renters insurance just covers your possessions inside a rented space. Both those policies, whether they're homeowners or renters, covers your things wherever you are. So if you have a laptop in your car that's stolen, it isn't your car insurance that covers it, it's your homeowners or renters policy. These policies, importantly, also come with deductibles. In the case of homeowners insurance, it's typically a percentage of the total value of your policy. So that's going to be somewhere between, say, $1,500 and $3,000, depending on the total, or even higher, depending on the value of your home and how much it's insured for. And a key difference that I don't put on the slide, but did want to make sure I mentioned, is a key difference between homeowners insurance and mobile home insurance is that with homeowners insurance, you can usually buy either actual cash value coverage, which replaces the value of your home to rebuild it up to a certain amount, or you can buy replacement cost coverage, which escalates over time to keep up with inflation and higher building costs. A startling number of people do not have replacement cost coverage, even though they could get it. And then they find out when the period of time between when their home was built and the time of the loss, there's been a significant increase in the cost of replacing your home. Then they end up uninsured. That's not something insurers want to see. So those of you out there who have homeowners policies, ask your insurance agent or broker or your company about whether your home qualifies for replacement cost coverage. Take a look at that, because it's a good idea to know what those costs are and how it can benefit you. With a mobile home coverage, typically replacement cost coverage is not available. You only can get actual cash value coverage because homes increase in better value over time. Mobile homes do not. The property around the mobile home may increase in value, but the mobile home is a depreciating asset. So it's difficult, if not impossible, to find replacement cost coverage for mobile homes. And I know that's been a problem for people in Oregon, where there was a wildfire that decimated so many hundreds or thousands of mobile homes. And that's a significant issue. So again, renters coverage is a little bit different. Of course, it's much cheaper than homeowners insurance coverage, has much lower deductible, but it covers less because it's only intended to cover, like when my daughter went here to the University of Oregon, we had a renter's policy for her. It cost $115 a year, and it covered up to $30,000 of her stuff, which fortunately we never had to file a claim, so that was good. Unlike her car policy, well, we don't need to get into that. 2 cars later. So there are some challenges. Did it switch over?
No.
Oh, I was trying again. Sorry. Oh, I did want to mention the things we don't cover. Flood, earthquake, those are not covered perils. Earth movement, whether it's a sinkhole or a landslide, typically not covered. Those coverages are available, but they're not included in your homeowner's policy. So if you're concerned about that kind of insurance coverage for your home or property, you need to check with your insurance company that can steer you to where to find those kinds of coverage. Okay, now let's talk about some challenges in the insurance market generally for folks in Oregon and across the country. Some of the challenges for property owners are around the issues of availability and affordability. Availability is when you can't find insurance because maybe your policy has been non-renewed by your company, or it's just not available for some reason where you live. Affordability, of course, is how much you have to pay for the premiums. Unfortunately, right now across the country, in certain areas of the country in particular, California, Florida, to a certain degree, Oregon and Washington, Texas, there are swaths of places where insurance is becoming very expensive or impossible to obtain. And that is because insurers are also facing significant challenges. So some of those challenges for insurers include inflation, claims and repair costs, the cost of natural disasters, and the cost of reinsurance. And I'll go just really quickly through each of those. Costs for rebuilding. I mentioned before how much it can change for an individual homeowner, but this is happening across the nation. I was just talking to TK before we came in about a stat I ran across when I was preparing for this presentation. One of the biggest factors right now in home construction is that the home construction industry is missing about 340,000 people who used to work in that industry that don't work in it anymore. So at a time when Oregon and other states are struggling to even try to approach an area of keeping up with the demand for housing, they don't have enough people to do the jobs, and all those delays in construction result in higher costs. In addition to that, building materials themselves, lumber, asphalt for roofing shingles, all the things that, cement, concrete, all the things that go into building a home are more expensive, dramatically more expensive. They went up by double digits, where overall inflation may have gone up somewhere between 8 and 12%. Construction materials went up more like 20 to 25%. Some of those costs, those inflation numbers are down in 2023, but they're not down below. They're just not escalating as fast. So that means that the economy has still a lot of catching up to do from the pandemic, and those costs continue to impact what insurers have to pay out. Now consider what happens when 4,000 homes are lost in a single event. Consider what happens when there are simultaneously hurricanes out east, hurricanes in the Gulf of Mexico, and unusually a hurricane that comes up through California, and it becomes a rainstorm that does damage in the billions of dollars across Utah, California, and southern Idaho. These are massive storm events, and they're happening more often. Record numbers like $100 billion in insurance losses, insurance payouts for natural disasters last year. Already this year, a record of $50 billion for what are called convective storms. That's one kind of peril. Convective storms are when moist air comes up from the earth, and it manifests itself in any number of different ways, from hurricanes to hailstorms to tornadoes. All those things are happening more frequently, they're happening in more places, and they're causing a lot more damage across the country. So all of those things are adding up for much higher costs for insurers. And then, of course, there are the other costs that are always a part of the insurance process, like liability claims against insurers and having to go to court more often, and nuclear verdicts and all that sort of thing. Those things are kind of already built into the claim, to the rating process. But then you add on top of that these massive natural disasters, and insurers are struggling. They're paying out massive amounts of their reserves. So in the good times, when people wonder about insurance company profits and whether CEOs are paid too much and whether insurers keep too much money in their bank accounts instead of paying it out in claims, the fact is that insurers always have to pay out claims, or they get sued, or they get in trouble with TK. But also they have to have reserves, because there are times when the amount of money they're taking in is less than the amount of money they're paying out in claims. And that's called the combined ratio. And a lot of insurers right now are upside down with their combined ratio. They're taking in a dollar and they're paying out $1.40. Insurers cannot afford to keep that up for very long. Those reserves dip down low. That changes their AM Best rating. It's not good for the companies, and it's bad for policyholders, because you don't want your company to run out of money before they've paid all the claims. So what do insurance companies do? They get reinsurance. That's insurance for insurance companies. They pay a lot of money for those insurance policies. Those policies kick in after a certain amount of money is paid by the insurance company to their policyholders, and it backfills the surplus or helps them pay out claims so that they don't go under when things are really difficult. That insurance is getting harder to get for insurance companies, and it's getting more expensive. Again, leading to, why does insurance cost so much? That's one of the reasons why in this current environment we're seeing that. Well, oh, went too far. Okay, well, I'm going to go, oops, I went too far again. Hold on. Okay, so I did want to point out a couple things. TK's boss said this at a Salem City Club meeting a couple weeks ago. The insurance department here and insurance departments across the West are keenly aware of what's happening out there in the marketplace. They're doing their best to keep up with insurance filings, rate filings. It's important for you to know that insurance companies can't just raise your rates. They have to have their rating plans filed and approved by the insurance department in this state and Washington state, most other states. They have to do that. And they do that here. So they have to be actuarially justified. They can't just make it up. Thing is, though, that an insurance company might file a statewide rate of 5% increase. That means some people are going to get a 30% increase or a 50% increase, and some people are going to see no increase at all. They're trying to figure out how best to judge the risk. And that's where we come into things like wildfire risk scores, company algorithms to help determine what their risk is for how many policies they've underwritten, and what they'd have to pay out in the event of a large-scale disaster. So just a couple things. I know I'm almost out of time, so I'll try to wrap this up pretty quickly. Some legislation has been enacted in the last couple of legislative sessions in 2021 and 2023, and they're all designed to coordinate better first, fire response, fire preparation, mitigation, and response and recovery. So Senate Bill 762 was in 2021. And then the legislature also passed, what was the House bill number?
3270.
Yeah, 3272. Representative Marsh is here. Real key behind House Bill 3272. And again, this past session was 2982. And those are designed to protect consumers by requiring insurers to provide longer time frames for rebuilding. And I'm aware that some folks haven't even been able to rebuild from the 2020 fires. So extending those time limits, more additional living expenses for people who have to live outside their homes while they're being rebuilt. And then looking forward to 2982, legislation that requires insurers to pay out 70% contents coverage without requiring proof of the inventory of proof of loss. Those are steps that insurers have had some hesitancy over, but they've come around. And I think we've been trying to work proactively with the legislature and the insurance department. Finally, I'll mention Senate Bill 82. TK can probably talk more about that. That's about to take effect, and that's going to require insurers to tell you, consumers, a lot more about if you have a negative thing happen to your policy. Either you get non-renewed or you get a significant rate increase. Companies are going to have to explain why, and they're going to have to give you more information about things you might be able to do to reduce your risk, lower your rates, or retain insurance, which frankly is the biggest single thing, right, is keeping your coverage. Whether that means you've been priced out of it or you've been non-renewed, that's not something that's good for the entire economy of the state of Oregon, let alone individual families. So that's kind of a snapshot of a look at the insurance market currently. And I'm going to turn it over to TK, and then we're going to hear some great stuff from IBHS.
Thanks, Kenton. Just so folks know, as we move through this presentation, we're going to have the presenters come through, and then we'll open it up for questions as we have time. So hold those questions if you can. Next up is TK Keene, longtime public servant in the state of Oregon and the current administrator of the Division of Financial Regulation.
Yep. Good morning, everybody. And first, thank you, Michael and team, for this invitation and opportunity to speak to you all at this conference. So I was asked to really focus in on the build up to 2020 and the aftermath from an insurance perspective. More specifically from the consumer protection perspective, because we serve as the state's consumer protection arm as it relates to insurance. So to dive right in, yep, got the right slide up. Thank you. So let's dive right in and kind of talk about the buildup to the 2020 Labor Day wildfires and what was on the mind of Division of Financial Regulation and Governor's Office and legislators before we got there. So there was a Governor's Wildfire Council put together to start to think through what we needed to do as a state and the investments we needed to make in order to ensure that we were as protected as we possibly could be as it relates to wildfires. None of this, in terms of what happened in 2020, I would imagine was on the minds of most people as they were serving in 2018 and 2019 and putting this work together. The flavor of it for Division of Financial Regulation was really centered on what incentives could insurance companies provide or the state provide to consumers to create defensible space in their homes so they could, be more eligible for homeowners insurance or building hardening or any number of steps that we could provide. And unfortunately with 2020, just a confluence of events that was really, really difficult for everyone. It was put the conversation in a completely different context. And going back to those times, we had the ability to put in place an emergency order, but our emergency order authority is fairly limited in scope. We can do things like extend the amount of time that it takes consumers to make a premium payment or fulfill other obligations. We can put a pause on cancellations or non-renewals during an emergency. We can give people more time to provide information about their claims, but that's pretty much the entirety of it. And so the bulletins and the order you see there were many of those were in support of those emergency orders and providing details around which areas were being impacted, and that relief was being granted. We did put forward also some guidance bulletins on expectations that we had for insurance companies during this period of time. So we might not have had legal authority to go in and order them to take a specific action, like, for example, to provide 3 years to rebuild versus 1 year, which was in the insurance contract. But we could publicly put it forward that that was our expectation and start to create those expectations publicly, which was helpful. We also realizing that most insurance contracts and homeowners have a 1-year rebuild period. That was going to be wholly insufficient based on what we saw in 2020. And so we sat down with Kenton and we sat down with a lot of insurance companies and asked that they commit to providing 2 years to rebuild. 3 years. Many companies said, we'll give the consumer as much time as they need, which was huge because people were feeling not only the pressure to rebuild quickly in the midst of a pandemic and a labor shortage, but also, the stress of the event itself and the trauma that goes along with just trying to organize your life after you've had your entire house and all of your belongings wiped out. It's just unfathomable in terms of a disaster. So we negotiated those agreements and put those on our website and let consumers know that, hey, if you are in need of more time to rebuild, this is what we've negotiated out with the insurance companies.
TK, if I might.
Yes.
And I've known TK for quite a while. He's very understated. The fact that they were able to come to a voluntary agreement to extend those timelines to rebuild is an absolute sea change. That's really significant. It was unprecedented in Oregon, and it really reflected, I think, a willingness from both the part of industry and the regulator to get there. Because certainly we knew early on, right? This is not a 1 year to rebuild. So thank you.
Absolutely true. Yeah, absolutely true. And so in addition to that, being the consumer protection arm for the state and in insurance, we were out in the field, actually in the days after the 2020 fires and years preceding that. And currently we have an outreach team that's dedicated to go out into the field and help consumers file claims, give them information about their insurance policies to the best that we can do. We're a bit like the referee in the game. And so we can explain generalities. We can sit down with a consumer one-on-one and look over their insurance contract and offer them the opportunity to file a formal consumer complaint. But, the insurance company themselves, who they have that contract with, also has a role here. And so that's just one aspect of what we do is field operations. I would also add here, in addition to the consent agreement and the work in the field, other tools that we used in the midst of 2020 were really looking at data calls and pulling back information. We cannot get information, unfortunately, in real time during a disaster. It does take some time for data to come to the insurance company and then for us to go retrieve it, but we have that ability. And in brief, we also conduct market conduct examinations and desk audits so that we can ensure consumers overall are getting the benefits that they're entitled to. So I'll touch on here. Oh, I may have gone too far. Sorry about that.
One more.
Yeah.
There you go.
All right, and I know I'm running close on time here, so a couple of bills for you all to take a look at, and Kenton touched on some of these. The legislative response to 2020 was also massive and helpful, and much appreciation to Representative Marsh and others who had a hand in that. So 3272, one of the lessons learned was people did not have enough coverage, particularly additional living expense coverage for a prolonged disaster. And so 3272 provides additional coverage there, and basically covered a lot of holes that we found in the 2020 wildfires to provide consumers with additional time to rebuild, money to pay in a different location if that's what they chose to do, and several other policy changes. One key aspect of what we're looking at in Oregon has been prescribed wildfires. And so we did a study on prescribed fire insurance and what was available there. It's a pretty narrow market, but yeah, I know that there's a lot of interest in doing more prescribed burning. So still more work to be done there. And then, as Kenton mentioned, Senate Bill 762 was the comprehensive statewide wildfire bill that contained a number of funding streams to continue to build out resources to prepare our communities and relief for consumers affected by wildfires. Jumping to 2023, Senate Bill 80 made changes to the statewide wildfire map and also contained another pilot program for prescribed fire liability. Senate Bill 82 improved insurance notices that go in the event of a cancellation or non-renewal or a significant increase. And 2982 enhanced contents coverage along with other provisions. And just jumping ahead here. So
Go yet.
all right. So just a couple of other items I wanted to mention. I mean, and this would take way too long, more time than we've got to really jam through completely. But no doubt climate change is greatly impacting the availability and affordability of insurance in Oregon. And people who bought thinking they were safe and building in a spot that wouldn't be affected by significant drought or wildfire risk 25 years ago are now finding out that, you know, as climate change has progressed, that they are living in spots that are greatly impacted. So that's one component of our involvement. We serve on a number of national committees looking at this, as well as working within the state on what could we do from a policy perspective around the climate change that we're all seeing, touching on that insurance perspective. Additionally, you know, we had a lot of lessons learned out of this about coordination with other agencies and local governments. And so, you know, I think insurance was a bit forgotten at times in the mix leading into 2020, but it sure is front and center now for everybody. And so I think that's been, you know, a development that, you know, we're mindful of as we make our connections out in the communities and continue to talk about policy changes within the state. And finally, I just mentioned, you know, we are really focused on availability and affordability of coverage at this point in time. We know people are continuing to see cancellations, non-renewals, significant rate increases. To that end, we have a market of last resort. It's called the Oregon Fair Plan. It's really meant as a temporary tool to get people coverage in a pinch, and it's not particularly affordable, but it does provide necessary bare bones coverage. And we've increased the limits around the FAIR plan. It's part of our insurance code. We have the controls there to be able to do that. And the board recently approved those additional limits to provide people with more coverage. But I would say on the whole, you know, big picture issues, in addition to lessons learned around touch points with other agencies and local governments, just, you know, the amount of underinsurance that goes on, unfortunately, in the state. I think people it's easy to underinsure yourself, and unless you have a robust check every year, it's a challenge to keep up with it in a lot of respects. So a lot of our education time is spent on ensuring people are making sure people are insuring to the proper levels and how they can do those checks themselves. So thank you.
Thanks, TK. Evan is with us from the Institute of Building and Home Safety, and am I correct, is the fire science engineer? Is that capture it, or?
Yeah, research scientist / engineer.
Okay.
Yeah. Oh. I think I hit the wrong button. We're back to the beginning.
You'd like me to do my presentation again?
Please.
I will
Awesome.
do that to anyone.
So while we're getting back there, yeah, my name is Evan Sluder. I'm a research scientist and engineer for the Insurance Institute for Business and Home Safety.
I specifically work on how the built environment is impacted by wildfire. I'm really happy to be here. I'm new to Oregon. I'm based in Portland now, but I've been here for about a year, and I'm also new to this community. Yeah, my background's in research, and yeah, just happy to be involved and getting to know all of you. So thanks, Michael, for the invite, and Lane County and University of Oregon for hosting this event. Okay, great. So first, bit of information about IBHS. We're an independent, nonprofit scientific research and communications organization, and we're supported solely by property insurers and reinsurers. We study wildfire, wind, rain, and hail, and the way that homes and businesses can become more resilient to this severe weather. Using our state-of-the-art facility in Richburg, South Carolina, equipped with the capability to replicate severe weather like hurricanes, wind-driven fires, ember storms, hail impacts, and wind-driven rain, we can identify aspects of the built environment that are vulnerable to severe weather. We couple this research with post-disaster reconnaissance to understand how severe weather impacts the built environment. Looks like a little laggy on the video there, but our building safety research leads to real-world solutions for homes and businesses, and with a goal of creating more resilient communities. Specifically to wildfire, we are currently studying different exposures that pose a threat to our homes and businesses. This includes structure separation experiments. So understanding when we have one structure ignition, the pathways that fire uses to spread from structure to structure or structure to accessory unit or other buildings or connected fuels, wind-driven fires and fuel breaks. Oh, did I hit pause there? And understanding the rate of spread of wind-driven fires and how fuel breaks impact that spread, the flammability of ornamental vegetation and the risks that it poses close to homes, exterior deck performance, and the impact of firebrands, how those firebrands interact with structures, their propensity to ignite building components, debris, vegetation, and things like mulch and combustible ground covers around homes. Using our research, we've developed a system of mitigation measures to drive down the risk a home faces from wildfire. So this system of mitigation measures is called our Wildfire Prepared Home Program. When a homeowner is able to take on this system of mitigation measures collectively, they can meaningfully reduce their home's risk to ignition from wildfire. I will come back to talk about this a bit more, but I wanted to talk about how we arrived kind of at these mitigation measures and a little bit about each individual building component. So we arrived at these mitigation measures by studying building components in the field and in the laboratory. We've worked to mimic the exposures that we see in the field and damage we have observed to different individual components to understand how those components perform and what drives their failures. So I have a few examples here of vulnerabilities that we've replicated. So windows, exposures, fire exposures near homes from combustibles close to homes can put a pretty significant heat flux on the windows, and especially with windows like single pane windows cause a break. And once that exterior building envelope is broken, it allows a pathway for the fire to enter the building. And once the fire is able to enter the building, it's a big issue. Next, I want to talk about is mulch and other combustible ground covers. During red flag warning and warnings, droughts, and other conditions, ground covers like mulch are extremely vulnerable to embers. They accumulate and kind of nest in these ground covers and can ignite. And once they do ignite, the mulch kind of provides a pathway. So anything that's connected to that combustible ground cover is at risk of ignition and fire exposure. Next, I wanted to talk about was fences. Combustible fences can act like a wick. Debris accumulates normally against fences where embers would accumulate. And once we see ignition, that fence can act like a wick and take fire to a home. Vents. Vents that are not sized with embers in mind can allow them to pass through. And once embers are able to pass through these vents and enter a home, there's a risk of ignition. And finally, decks. So embers or heading fire can ignite a deck, and materials stored underneath. Size, material, and regular maintenance of these structures are crucial, especially because windows and other items like that above decks are generally another pathway for entering the building. So another video here, this is in our lab. We've built 2 side-by-side structures, and we have ember generators that can expose buildings. So on the right side, our right is our wildfire prepared home structure, and on the left is an unmitigated structure. We know that embers are the leading cause.
And these embers are flying at both structures, right?
Correct, yeah. It's the same exposure to both buildings. So we know that embers are the leading cause of ignition during wildland interface fires. These ignitions are due to either embers accumulating on a component and directly igniting that component, or the ignition of ground cover, like the combustible mulch shown in this video above, in close proximity, which then spreads. With wildfires that we see at the scale that they're at today, large amounts of embers can expose large entire communities at once, creating an extremely overwhelming situation when homes aren't hardened against this type of exposure. So there's a misconception that maybe not in this community who's experienced these kind of fires, but in general around if a home should ignite, that a fire department would be able to respond or put out the fire on a house. But due to the level of exposure in the large areas that are exposed at one time, these fires can cause a very quickly overwhelming system that can lead to a conflagration. So once a home is ignited by a wildfire, there's a 90% chance that it's a loss, which is an incredibly overwhelming number, especially with what we see in the lab and how without very specific engineering towards wildfire hardening, how easy it is for a home to ignite when we see these types of exposures. Jack Cohen, a leading scientist at the intersection of wildland fire and the built environment, had the following quote, which is, "Wildfires are not a forest problem, it is a home ignition problem." And homes are, I think he's speaking to the fact that homes are currently vulnerable in the way that they're built to wildland fire and can act as a fuel and aid in the spread of fire and lead to conflagrations that we've seen. Once a home is ignited, it can pose a threat to neighboring structures and other combustible connected fuels like sheds, vehicles, and vegetation. Homes can also be a large source of embers once ignited. So one home igniting can lead to a chain of events that subject a community to a conflagration. So going back to Wildfire Prepared Home, which is the program that we've worked to develop after investigating all of these individual building components and their performance. So with a system of mitigation measures we've discussed, or in Wildfire Prepared Home, where we can reverse this trend of home ignitions. Preventing home ignitions, we're aiming to make communities fuel breaks instead of fuel sources, so they can coexist with these exposures and coexist with an environment that looks like it will have an increasing amount of wildfire. The task of taking a program like Wildfire Prepared Home and implementing it at a large scale is not a small task, but it is something that we at IBHS have done before with our Fortified Home program, which I want to give a little bit of information about now. So our Fortified Home program is a lot of our wind research, and it's a program that works similarly to Wildfire Prepared Home, but in the sense that it takes our wind research data and has created a new standard of resilient construction for exposure to hurricane force winds and other things like this. So Alabama's Department of Insurance was actually the first to implement this program, and it pooled a combination of policy levers, including a resilient retrofit grant program and an enhanced building code in coastal communities that helped it strengthen its resilience and made Alabama a stronghold for this program. So a study from North Carolina State followed the impacts of 4 hurricanes that showed that our fortified program was working. It reduced both both the frequency and severity of hurricane damage. These storms too were all lower end storms, so we would expect to see the reductions in damage and rates and claims and things like that increase as we move closer to our design limit for fortified. This program is keeping people in their homes at almost a quarter less damage, and a third less people had to go through the claims process, and generally saw a significant reduction of costs as well. So Alabama's Department of Insurance was the first to use fortified as a standard for resilient construction, but more than 10 years later, it's become a national standard, which is our goal with Wildfire Prepared Home. Fortified designations are now specifically listed as requirements for grants issued through a number of state and federal agencies. So this program in fortified is catching on because it works. And going back to wildfire, the hazard is different from what we see here, but the policy response can be the same. The science is catching up, and we have the tools to help communities prepare and recover from wildfires. So all of this information is available now to anyone on our website, all of our mitigation measures and recommendations, and we work to present them in a way that is approachable for anyone, any homeowner, business owner, policymaker, anyone who wants to come have a look. And they're set there to kind of encourage people to feel, empowered that they can do something now and take in this information and make a difference of their risk. Also, just a plug for our website. I would definitely recommend checking it out, especially if you had any interest in the demonstrations or videos that I showed. We had Good Morning America at IBHS a few weeks ago, and they did a segment on our research, and they are much better at presenting this information than I am. So I would definitely recommend that. Please don't let this be wasted on you because I'm the one presenting it. Yeah, thanks so much. I'll hand it back over to Mike.
Thanks, Evan. Actually, I'll start with a comment and then perhaps follow up from you, and then
Sure.
I'll open it up for questions. What's really significant about this work that IBHS has done is, especially in the wildfire prepared home, is we're not talking about a whole house rebuild. These are incremental steps that taken together really solve the problem here. One, I think a common misconception is it's got to be a metal roof, and that's not what your studies have found.
No, so our program recommends a Class A roof, which is all asphalt shingles on the market achieve a Class A roof. So most roofs in the US already achieve a Class A fire rating, which is the top end of it's the highest, it's the best you can do.
And then it's the rest of the information, and we don't need to rehash that. You saw it on the slide, or you can certainly look it up, but it's all those components together. And when I think about fencing, right, we're in the same category. Our home, when I put our fence up 10 years ago, it's like cedar, right? Because that's what everybody does. And now you go, oh my God, what was I thinking? But for those fire breaks, it's like a 6-foot section.
5-foot section.
5 foot.
So
okay.
One of the biggest things we've seen with ember ignitions and home ignitions is that the most important region for you to consider is the 0 to 5 feet from the exterior envelope of your home, because that's where, as embers come in, the house kind of acts as a break in the flow and creates little eddies, and it's wherever leaves or anything would accumulate around your home is where embers will also accumulate, which is really what drives a lot of these issues. Is those same flow patterns are leading the embers right to where everything else is already sitting. So it's easy to think, that don't look super harmful, these very, very tiny embers floating around, but they get together in numbers on top of things that have already been accumulating and really cause issues. But yeah, it's that 0 to 5 foot region. So it's not your whole fence, it's just the 0 to 5 feet away from your home.
Okay, Evan.
Yeah, thank you.
TK, having, as we know, years ago, I'd worked side by side with the consumer advocates at Financial Regulation. What would you say were lessons learned from this staff's perspective in a scale of response, right? Because I always think of them being really skilled at an individual claim policy, but now there's thousands of Oregonians who've been displaced. So What did that look like?
Yeah, no, that's a great question. And, for us, I think it really was, we started off about 2017, even some fires in 2016, putting consumer advocates out into communities and holding community events and like providing them with the one-on-one help they needed to move their claim forward for insurance, or explain to them, all of the different policies they had. And, we were perceived from that consumer advocacy lens as a neutral advocate for them, to the extent that you could have such a thing as a neutral advocate. So we were there to help consumers go through and explain as best we can, what their policy contains. But I think the big lesson learned was that one-on-one sort of community engagement really works. And so we're going to keep doing it. And it is a resource spend for us to be out there. I know we were out in Blue River recently, at least twice, not far from here. And we just keep going out into communities where we hear, there's a large scale problems and people that need our help. And we will sit down with them with a laptop and go through, either filing a consumer complaint or getting a response from their insurance company, or any next step that will help them move forward in their lives. So that's, I think, one of the lessons learned. I think the other was really just the different state agencies and local governments that are all interconnected, that help consumers solve problems, and how we can even be tighter going forward in those conversations and aligning those resources for people. So it was part of our division. We lent Michael for an extended spell over to the Office of Emergency Management, because Michael had just a tremendous depth of knowledge in building codes, but also in financial regulation. And so understanding the insurance parts of it. And that was a tremendous help to Office of Emergency Management. Just provided that expertise that wasn't necessarily readily available in an emergency. So there's all kinds of different personnel items and shifting of resources we can do, but I think that's one thing that we've all learned through this, Michael.
Yeah, thanks, TK. One statistic that you had shared, Kenton, was the amount of insured loss in Oregon. And I know that uninsurance is such a huge, either uninsurance or underinsurance, but there's not really a way, and I guess this is potentially TK as well, there's not really a way that we have to capture that, is there?
You mean not from a data perspective, or how to encourage more people to get the?
No, just to say that unmet need, right? Because once somebody hits their policy limits, there's not a connector then to say there was an additional 50%, right, over that, other than at a case management level. And I know we have many people here in case management, but I was just wondering from an industry perspective, is there any way to track that at a statewide level?
Well, obviously we can't track what people don't buy, right? Yeah. So the uninsured problem, I think, we can assume is relatively small, but it's huge to the people who are impacted by it, obviously. But statistically, it's probably not a huge percentage of people. However, underinsured, like there have been, I believe, national studies done recently that suggest that like 1 in 5 homes are underinsured by as much as 30%. So again, the lesson here is, insurance isn't a tremendously exciting topic for a lot of people. I like it, but it's not for everyone. And once you get it, you want to pay as little for it and get as much coverage as you can. And you just kind of want to assume that all the things that you think could go wrong are going to be fully covered because you see the ads on TV and everybody's happy. Well, insurance is a complicated contract of service provided by a company to you. And if you don't know what's in your policy, the time to find out is not when you file the claim. And the time to find out you're underinsured is not when your whole house burns down. So as much of a homework assignment as it is, every news release we put out, we say, go talk to your insurance agent. You should do that once a year, and you should have a thorough understanding and ask a lot of questions about what's in your insurance policy. We have some tips and guidelines on our website too for what kinds of questions you should ask, but you should know if if your homeowner's policy is actual cash value or replacement cost coverage. Actual cash value policies do increase a little bit with inflation, but they're not going to keep up with a dramatic increase in building costs like we've seen in Oregon and elsewhere across the country in recent years.
Thank you. TK, you
The other
follow
thing
up?
I would add is House Bill 3272 did deal with this in terms of providing a cost estimate for the value of your home at renewal. And so that's an option available for all consumers, should be getting that. But beyond that, what Kenton shared is spot on, and it is very much in your interest to go home tonight and look at your insurance policy and make sure you understand the ins and outs of it. And if you don't, then take the time with your agent to sort that out, because underinsurance is just a massive problem given the costs that we've seen increase in just plain inflation, in labor, across the board, building, cost of building goods. So that is just something that everybody should have on their radar. Complete uninsurance, I agree with Kenton. That's probably a small problem, but it's a costly problem. There are a few people who just can't get insurance. They may be in a spot where their mortgage is already paid off and they've just decided that they're going to forego, either because of cost or unavailability, to have insurance. And that's not something we can easily measure. We're getting better data all the time from the insurance companies in terms of actual coverage and who is coveraged and the value of claims cumulatively, but capturing underinsurance and uninsurance is a real issue. Thanks.
Thank you. We have some time. I'm looking for, actually, I didn't come up. Is this real time, 12:13? Is that correct? Great. Thank you. So we have time for questions from the audience. If there are folks that have, I see a hand back here now. Can we get a microphone? I don't know how. Okay, great. Thank you.
Raise your hand so I can see.
So while we're waiting for that question, I just wanted to add something on this insurance issue. We've been talking about climate change and the impact, and TK referenced, maybe you had a place that wasn't necessarily, 25 years ago, it looked different. I think the problem a lot of people are having today in Oregon and across the West in particular due to wildfires, you don't have to live in a high risk area to be impacted by climate change. It's impacting your insurance company. So, hurricanes in Florida are impacting your insurance company. Tornadoes in Oklahoma are impacting your insurance company. Some of those companies are making decisions about underwriting that affect you. And they're making changes to their rating that affect you because of things that are happening elsewhere. So I just wanted to point that out because that's what's happening in the marketplace right now. And so if you have received a notice of non-renewal or a significant rate increase, it may not be because of anything you've done or haven't done. You may even have taken some mitigation measures, but your company may not have the same risk appetite for a certain area of the country simply because they're terrified that if something major happens, they won't have the money to pay all the claims that'll come from that disaster because of things that are happening elsewhere. So I just want to be kind of clear on that point. Sorry.
No, thank you.
Hi, my name is Denise Lupton and I'm with Access in Southern Oregon. I'm the housing supervisor there. And my question is for Evan. First of all, if you are participating in any of those videos that you showed online, how fun, what a cool job that is to be able to do that. That's really great. But I'm wondering, are those videos available also in addition to the print materials online on your website? I manage a lot of case management teams, and I want to make sure that we can provide this in our counseling and in our education efforts. And one of them that really stuck out was the Ember wind started fire. I'm curious of the materials used on the home that did not burn, if you happen to know, or would that be available online too?
That's definitely available. And a big part, so if you just send me an email or go on our website, a lot of it is publicly available, but we have like some of our team works to cater some of our material depending on how you're using it or the audience. So I'd be happy to put you in contact with them. And we have a whole team devoted to kind of just getting the message out and using these materials as best we can to support the work that you're doing. So happy to share that. And just reach out.
Thank you.
And I know that I've seen, of course, I can't cite it off the top of my head, but it really is an incremental cost. If somebody is already looking at rebuilding, right? So that the Class A roof, right? That's easy to start with, but the siding would typically be hardy plank or another cement siding.
Right, and so there's two designations of the wildfire prepared home. The base level doesn't require hardened siding. It just really focuses on that 0 to 5 foot region and preventing ember ignitions, because that's really driving most of the loss, as we know. So, right, so there's two different levels, and the base is, yeah, from a rebuild, I would say it's very approachable in terms of cost. For retrofitting, it's more difficult, obviously, but yeah.
Another question in the back, Alex?
Thanks, Michael. Alex Kyler, Lane County Intergovernmental Relations Manager. I'm really intrigued by the discussion about underinsured and uninsured. One of the things that we tried to look at in the aftermath of the Holiday Farm Fire was how to suggest metrics for public funds allocations across the fire impacted counties. We looked at data from the Insurance Commission that was in real time, at least that was my perspective. So I wasn't sure that we really had a great database about how to sort of showcase the need in various regions across the state. And I'm wondering if any of you could speak to sort of thinking about metrics for dollars being allocated out and how we can capture what kind of insurance coverage existed versus what did not, to get at some of the various and somewhat specific needs of various regions around the state. Thank you.
Yeah, thank you for the question. And I helped work on that project with the division. So what we understood at the time was that Congress had a large appropriation that they were willing to make if we could identify the amount of underinsured or uninsured persons, houses in the state to specific fires. And so we did our best, since we didn't have real data, to extrapolate from California and some other states where they had done similar sort of endeavors. The challenge that we had in terms of like providing solid real data was simply timing. They were requesting the data on a very short timeline. And so we did our best to extrapolate and provide estimates and provide the caveats that we needed to, but because people might not have even filed their full claim yet, there was no real way for us to assess what the gap was. So I think if the query would have come perhaps like a year later or 6 months later, we might have had more information to provide. But from my perspective, I think that was the real challenge in trying to estimate that for Oregon.
Michael, we have another question over here.
Hi, thank you all. Insurance is so exciting. But yes. No, I'm wondering if there's any talk on a policy level to incentivize insurance, particularly in rural areas, right? Where you have multi-generational properties that are paid off, or maybe they're a cabin, that if at the county level, if property tax deductions maybe could incentivize insurance policy holding. And then also it's a way to capture data. So you know which, at the county level, you would know which structures are insured or not insured, just sort of an elective option for the property owner to report or to incentivize them to purchase insurance.
Thank you for your question. So insurance, I think I mentioned earlier, it's a tricky business because the insurer has to try and estimate what they think could happen, and then they have to try and price the risk based on what they think could happen. And then, so what insurers try to do is combine as much science as they can with actuarial data and estimate how much of an area they can afford to insure, how many properties they can take on, and what they're going to charge for that risk. And one of the things that happens when you start, when you develop something new like the Wildfire Prepared Home Program, as has been pointed out, they can demonstrate that it's worked with hurricane fortified homes. That's excellent. There's a lot of hope and belief that the Wildfire Prepared Home Program could have similar successes. There are some tricky parts, and I'm sorry to sort of wind around this question a little bit, but I think what the answer I'll get to for you is that there will probably be a day, if this is a widely adopted standard, both in building codes and in retrofitting of already built communities, that insurers will be able to respond to this as insurers do with like the Firewise program, where there may be discounts for property insurance policies that for communities and homes that are adhering to the Wildfire Prepared Home Standard. We're not to that place yet for two reasons. One, it isn't in place in enough places for us to see the results. But also two, it has to be in place for a bit, and we have to see the impacts of what happens when there is a fire and how much less loss there is for that to become part of the actuarial data the insurers use to price a product. I don't think I'm going to let TK speak to the issue of whether or not there might be, government funding available for that kind of incentive building. But I think the first step, one of the things that Oregon's done that I think is smart, is with Senate Bill 82, is they didn't pass a bill to require insurers to give insurance discounts to people for something that's not been proven to save anyone any money yet. What they did say is, if you're using any mitigation discounts, we'd like to know what they are and what they're based on. If you're taking negative actions against insureds by either non-renewing or raising rates, and it includes wildfire risk information, we want to know what that information is, and we want you to explain it to consumers. That's the starting point from the insurance industry's perspective of getting the data necessary to know if we can provide mitigation discounts for people in the future. And that's the insurance side of it.
Yeah, and I know there's state money available for building hardening. I think it's our building codes program that operates that. There's numerous other buckets of money here and there to allow, like, for example, the Credit Union Association offers up, interest-free loans on a small scale to people who take out their mortgage with a credit union. So there's buckets all over the place to further building hardening objectives. I think Senate Bill 82 will help in that, if an insurance company is non-renewing somebody or providing a significant increase, they not only have to explain why, but the mitigation steps that consumers can take to improve either basically improve the ability to write their property. And so in that analysis is presumably going to be whether or not the building hardening was done and if that's a step that consumers can take. So I think we'll start to see it kind of work its way through over the next few years through that bill. There's also a real data gap challenge in that, a lot of people already have done some degree of building hardening, but documenting it and making sure that it's done currently and correctly is very difficult to ascertain, other than having somebody who's willing to be the data source or the source of truth in that conversation. So more to come there for sure.
I think we're at time. Yeah.
Okay.
Yeah.
Very good. So got the call for time. Gentlemen, timing wise, I can't remember. Kenton, are you here for both days or are you out today?
I unfortunately have to leave today.
Okay, great. TK, you have staff here. If you wouldn't mind making sure that they're acknowledged, that would be great.
Yeah, no, absolutely happy to. I got to take off after this, but from our shop, we have Raven Collins, who's one of our policy analysts.
Stand up. Come on, Raven.
And Jason Horton, who's our public information officer. Is he back there? He stepped away. Okay, so a couple of staff members that are here for the duration of the conference.
And if you need help connecting with them for additional information, be easy to reach out to TK. Thank you.
Take one more question.
Oh, okay.
People tell me.
Oh,
Yeah.
okay, very good.
Thank you. I'm Stephen Sloan. I'm just wondering about the covered perils, and you had kind of water from inside the home and uncovered flood from outside the home. You have fire inside the home, but what about wildfire? Is there a distinction made in policies now?
I'm glad you asked that. We were reminded earlier this year, apparently, actually by the DFR folks on a call that we had with the P&C insurance industry, that it is not allowable or legal in the state of Oregon to have a fire policy, a standard homeowners policy, which is called a standard fire policy, that doesn't cover wildfire. So the answer is there's no distinction for admitted insurance companies, which are the bulk of the insurance companies that provide homeowners coverage for people in Oregon and across the country. There is something called specialty lines or surplus lines insurance. They're called non-admitted carriers. They do have to adhere to certain basic insurance laws in Oregon, but they don't have to include all the same things in their policies. So as TK can attest, we have seen some specialty writers, they'll write a policy for a home, but it doesn't include wildfire coverage. So that can happen, but not if you go with any of the companies that you normally would associate with homeowners insurance. Wildfire is a covered peril in all circumstances.
Great to know. Thank you very much. And a follow-up question is, let's see. We've published this wildfire risk assessment map. I'm wondering if anyone is tracking the impact on coverage, availability and affordability based on that new set of data.
Yeah, so Senate Bill 82 prevented the use of that map for insurance purposes. It is not being used for insurance purposes. The carriers, the insurance companies themselves have tools that look at this differently from an insurance perspective. And so I think the statewide map is very helpful at us collectively deciding where to point resources and how to best address the wildfire risk in the state. Carriers have their own tools that they've been using for years and years, and so they're going to go that direction. Thanks.
We can take another one.
We have another,
Sir, there's another question over here, yeah?
all the way in the back.
All right.
Thank you. Shri Sidoriak from Ashland, Oregon. And my question is to Evan Sluder. I do wildfire risk assessments, and the Almeida fire started in Ashland and then burned 2,800 properties, homes. And that wildfire map that was developed for the state of Oregon, and I believe was contributed to by IBHS in some way, is dependent on field models that are vegetation based. And I'm wondering if IBHS has developed a model for serial home burning. I know you mentioned that you were talking about radiant heat causing structures nearby, like accessory dwelling units or something like that. But we're talking about municipalities where home-to-home burning in large subdivision sized areas is actually what's causing the most damage now. And I would like to hear what IBHS has done or is doing to model that kind of fire behavior, because the current Oregon map does not do so.
Great, thanks. Yeah, that's a great question. So currently we are not developing any models that work on building to building fire spread. We're working on collecting a lot of data that we're then using to collaborate with specifically right now, the University of Buffalo. They're working on a model that considers both, approaching fire from vegetation, entering a community, and then spreading throughout the community. And they're doing that by, well, I don't want to go too much into the details, but they're piggybacking on earthquake models that were developed originally for structure fire spread after an earthquake. I guess what I can say is there is a lot of work to be done there. Our research is going to provide inputs for that research and to shed light on what heat fluxes and what heat transfer mechanisms we would expect to dominate in the structure fire spread, and how connective fuels interact with homes and things like that. So yes, there is work being done. It's not IBHS that's developing that model specifically, but yeah, after fires like in Lahaina and the Marshall Fire, the need for that model is definitely, we're aware of it, and there's a lot of good people working on it. Yeah.
So just a little bit of follow up to that. I am not a scientist and I do not play one at work, but I did attend a meeting down in Sacramento, IBHS, III, insurance organizations, builders, lenders, a lot of people with a stake in what happens with fire science. And CAL FIRE was a large part of that meeting as well. There is, as has been alluded to, there's a lot of work going on in that science area because the wildfire prepared home it's a landmark achievement, but it only, it helps your house, maybe depends on what your neighbors do, right? And it depends on how fires move through your community. And so as you look at the built community, you have to come to understand how a wildfire will move, what paths it will take, because you might not be able to do retrofitting it or rebuilding an entire community. So you need to know which properties are the key ones, so that the idea is to build a fire break amongst houses that slows the fire, that gives firefighters time to come and put the fire out. That's the idea behind some of the science. So I can attest that work is ongoing. There's a lot of space there that still needs to be filled and a lot of work that needs to be done. But a lot of organizations from various entities and sides are coming together to do that work. It's just going to take more time for the science to develop and for all the parties involved to come to agreement, much as they have around the wildfire prepared home. The wildfire prepared community is what's next.
Great. Well, our time is coming to a close. Gentlemen, thank you very much. Really appreciate your time and attention here.